Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Monday, March 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn up 3.5 at 472 3/4. May soybeans down 1.5 pennies at 1023.5, and May Chicago wheat was up 10 1/4 overnight at 561.5. This morning we had a couple of export sales announcements. First one, 126,000 metric tons of corn to Japan for 24-25. Also announced 195,000 metric tons of soybeans to unknown destinations for 24-25. Good morning, guys. Hope everybody had a nice weekend. We're not short on news again here with China imposing 100% tariffs on kind of $1 billion worth of canola oil, cakes, pea imports. So quite a bit of news there. Also had President Trump commenting on just some of the transitions that's taking place in the markets. Stocks are pretty weak here this morning. The Dow's off 450 as we speak this morning. So Justin, maybe a few thoughts here. We're going to have USDA report tomorrow. Not looking for anything major there, but certainly always report days can be interesting to say the least. So maybe a few thoughts to start the week, and then we'll throw it around the room.
Yeah, Dan, I'd say kind of more of the same, the volatility and headlines and policy and, been listening to a lot of, good speakers on podcasts, reading a lot of things. And I think it's pretty general, no matter what section you're coming from or sector, I should say, that you're coming from, everyone's just trying to figure out what all this means. And, obviously the goalpost is kind of changing. I think we're trying out some things. You've got tariffs on, tariffs off. Where does the dust settle on some of these things, and for how long? So obviously that, equities, selling off from, being from a, had a hell of a run. We talked about before the show, I think Trump 1.0, was most concerned about the stock market. And I think it's becoming more obvious that that's not the goal of the Trump 2.0 team here. I think they're trying to make some meaningful changes, and whether you agree with them or not, those are going to affect a lot of different industries, and especially in the short run. And knowing that he's only got 4 years, they're going, very fast, and I think the market's not used to such change and uncertainty. So I expect that to continue. China, maybe I missed something for them to come out and put these giant tariffs on Canada. I think it's kind of throw people for a loop. We put tariffs on China, they put them on Canada. So I don't know if that's like beating up your little brother at school, or like how that works. But so canola's lock limit down, soybean oil is down 100 points. So it's kind of struggling with, it's taking weakness from canola, but palm oil prices have been up. So the whole the world veg oil matrix has just been all over the place with biofuel policies or lack of direction. And now you've got things like this. So like I said, just you got to keep your head on a swivel, trading, or, anything can happen here. So yeah, it's interesting, then, corn's kind of getting a bid. We sold some stuff. We got a report. So, I think the commitment of traders I thought maybe the funds, I think people probably agree that we thought maybe they'd sold quite a bit more than 116,000 contracts. So still quite a lofty long. The question now is, have you liquidated enough, gotten into some good enough value areas where you kind of carve out a floor, so to speak, or at least until you get more information going into the growing season. That's kind of where my head's at.
Ben, what's on your mind this morning?
Yeah, just jumping on the COT comments for a second. The one thing in there that I thought was a little bit maybe eye-popping was index fund exiting. there was a big number there. I don't know if that was tied to stock market sell-off. Maybe someone was kind of some cross contagion, maybe for some losses in other markets. But that was a big number to exit in 1 week. Those are typically longer term time players. And here we sit, got back about 50% of the break to a T this morning. We're still the cheapest corn in the world. You know, you have to worry about recession, what that means. But we spent 2 years talking about how disproportionate equities to commodities were. So maybe there's a correction in there. But ultimately, we're still the cheapest corn in the world. We sold beans this morning, which you wouldn't think would happen. So I think there's some positives here and a report to see tomorrow going into a growth. And right now, longer term forecasts have a pretty wet April in there. I'm not a hill that I'm willing to die on, but I think it's worth keeping an eye on. So take it day by day.
Very good. Dustin, what we got final week of locking in, making crop insurance decisions. So it'll certainly be a busy week on that front. But what else is on the forefront of your mind as we start the week?
Yeah, just kind of, piggybacking on what Ben just said about COT, the funds, they sold 117,000 net contracts of corn using futures and options combined. This is net over that week. That's the second largest net reduction in a single week ever. The only other time would have been the week of Feb 28, 2023. So it is a significant move. I think everyone was quite surprised to see the funds get that long and then pull back that quickly. Same thing for beans. I think, of the over 1,000 weeks of records, it was like number 14, I believe, on largest weekly reduction. So, I think this goes back to maybe what Justin said too. It's just things are moving so much faster than, and a lot of it has to do with geopolitics. Just a reminder of like what can happen. This is just the start of the year. There's a lot of year left, and it could go either way. So I would just think about boxing yourself into acceptable outcomes rather than trying to pick a direction and go with it right now. That's just my opinion. It's not really a very predictable market.
Yeah, to add to that, it's interesting, Dustin. So the two biggest liquidations on record were this year in 2023, about the same time of year, when really it's not a typical time to do that. So I think it probably highlights the type of players that are in our markets and the size that they are. You would think like, a big summer market, like a 2012 or some of those big liquidating summer markets would be the top ones, right? These are times of year where nothing's really, we're just getting into where things are starting to go on. So it probably showcases just the amount of money out there now and the size of the money that's playing in all these markets, in my opinion.
Yeah, no, it is. And if you got 1 second to look at this, just the net changes on the week, not one of those really was, maybe 2019, right, when they were liquidating out of that market. But the only times we really see massive net changes on the summer, it's the summer times going into some of these years, or like, the reduction from shorts in 2019. But I didn't even think about that when you were mentioning that, but that was the last time that everyone was kind of looking at insurance as a clawback. Was, the difference between the sales closing week of 2023 and where that price was set at 591, we had a full 5% drop in price action going into sales closing, which changed a lot of opinion of what was to be purchased for insurance that year. And similar to this year too, we've had a 5% drop or close to it here. We bounced off the lows quite a bit, but
yeah, it is interesting. So really half of them, the top three, and then number 7 and 8 are really right around the crop insurance being set time frame or planning intentions.
Yeah. So interesting.
Guys, looking at outside markets real quick here, Dustin, any numbers in the stock market? I think people are starting to ask. It's been pretty volatile, but just from a technical perspective, like what's your thoughts there?
Well, we're below the 200-day moving average in the S&P. The long-term, like the yearly average, basically the 50-week moving average, is something that we're right now, right around that like 56.80 for the S&P. We're trading like close to 5,700. So I'm not a huge technician on the stock market, equity futures, but this is kind of where it needs to hold, I think.
Yeah, definitely. Just had some people ask. I mean, it seems like we've seen an uptick certainly in volatility here, and some people, it's like, what's the pullback to buy, type of mentality. And
yeah, well, every time it's like all these markets, like you look at a daily chart, and then zoom out to a weekly, and then zoom out to a monthly, and you usually have like a or you kind of have to just be able to like, okay, like look how far we've come, just to realize what kind of breaks just to be a normal type break, and could be quite far from here. I mean, if you're just being realistic.
And that dollar's an interesting one too. I looked at that this morning, and it's like, holy smokes on the dollar. I mean, we're lower again here this morning on the dollar.
I had an interesting podcast on just like, the types of people that won the election. I thought it was just kind of an interesting comment on, a lot of people that don't have a lot of assets voted for Trump this year. So these aren't big billionaires that want the stock market to necessarily go up. A lot of blue collar, a lot of people that are struggling to buy homes, to buy assets. So asset deflation might be something that we want, not we, but the administration. So you can't rule that out either. People can't afford houses, people can't afford assets. That's a problem for a lot of America. So I think one of the comments was, how do we do this without causing recession, right? And that's the tricky part. So
yeah, that's such a good point, Justin, because I mean that's mostly these deflationary pops that we get are usually from recession, right? So if you're talking about one of the loosest monetary policy and fiscal policy periods in all of history, that was probably the last 15 years. And now all of a sudden we're going to a hard stop where we're cutting out all the excess fat. It could play out in ways that we didn't intend. So
right. So try and be open-minded with that. If we switch from just the stock market has to go up, when a large majority of people don't have stocks, they don't own stocks, they don't own real estate, they don't own stuff like that. So
yeah, it's grocery bills, it's things like that are a direct effect to money in their pocket. It's getting the tax, the tax code done again.
Well, it's millions and millions of this generation that's quite large, 30s something year olds that can't buy a house or buy farmland or get into, assets. So
yeah, that's interesting. An interesting point. All right, we got a couple minutes here, Ryland. Strong close last week in cattle, and I wanted to ask you, there was a crazy close in hogs. They broke 200 points in like the last minute of trade on Friday. So I guess, what are your thoughts here as we start the week?
Yeah, I mean, as we know, it's going to be pretty volatile, especially in the hog side with this 10% tariff on China. I mean, I think just overall, you got a lot of macro concern, I think, coming into that market this week. But it has been on the rise. We've seen massive amounts of liquidation from managed money here on the hog side of things. Sold 33,000 contracts, so their net longs down to like 57,000 contracts as of last Tuesday. So, I mean, you had a lower cash market. Quoted as well, down $1.88 after this kind of recent strength that we've seen. So overall, you just, I think everybody wanted to see just a nice kind of bounce back up to that 40-day moving average. But at this point, there seems to be quite a bit of risk off, and maybe that continues this week. So, yeah, I mean, I'd expect some pretty volatile trade, especially with just the ever-changing kind of headlines with tariffs and new geopolitics going on. So I think that's something to keep sights on. It should be a wild ride in the hog market today, but at least on the cattle side, I think there's a nice sense of optimism kind of going into this week. You had cash prices just kind of start to get back to steady from the previous week, 197 to 198 in the south and 315 to 315 to 320 dressed in the north, and you're kind of you fell right down to the 200-day moving average and bounced. I mean, we know that managed money took off about 10,000 contracts, but we're starting to see things like beef pick back up. We're starting to see the cash market pick back up. So I think there's a lot of sites, a lot more optimism in everybody's sites going into this week.
Very good. Appreciate the update there. Just coming into the open here this morning, we got May corn up 2.5, 471.5 is the last. May soybeans down 2.5 at 1022.5, and May Chicago wheat is up 9.5 at 560 3/4. One thing to point out, we will, as we mentioned earlier, we'll have supply and demand report from the USDA out tomorrow morning, 11 o'clock Central. So we'll look at some estimates there tomorrow morning and give our thoughts on that report. Also, we've got 1 week left to set make your selection for crop insurance. A lot going on in the markets. We got a special offer going on till April 1st. So we'd love to visit with you. Take a look at those upcoming decisions you've got for crop insurance, how that fits in with your marketing. Please give us a call. We'd love to help you out there. Jack will have more information there in the outro. So appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Subscribe and it'll keep you up to speed on everything that's going on with AgYield. It doesn't cost you anything to do so. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week. And we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.